Okay, quick look through Monday's volume leaders. First things first, I'm just going to run through the portfolio year to date. Portfolio on the let me just bring the mouse over. On the right hand side, you can see we've got year here, 7.9% on the year. All trades running, trend trades in this portfolio are, there's a stop loss in the market on everyone at the moment, and I move that over to an end of day stop on ones what are trending strongly, and the override takes over. Up to invested, I'm 53% invested. Win ratio is 83% for open trades. Not important. That just means that, you know, 83% of the trades what are running are in profit. This one below it here, gain to pain. This is open profits are 9.8 times open losses. No stocks in the trend portfolio have hit a stop for, I think it's about a year now. You know, green shoots, trying to build into some potential outliers. So, you know, move up above, invested 58%. Index trend model is reading 56%, and I run my risk to how bullish the index trend model is. I'm a little bit overheated there. I've got to go through my stops and just update the trails, which will take care of that. Last week we had a little bit of volatility in the markets. In small caps, I will say, you know, the US markets did okay last week. Small caps didn't have the best of time because they're on the lowest of the risk tiers, you know. If you go to ShareScope and have a look at, or go onto Twitter at StealthSurf, let me just move that over there. I will go and get articles over. Bring articles over. Click on Jason there, top right hand corner, and this article here, it will just go through, you know, some big levels in the market. You know, I've been running this from the bear market. I've probably done 3 of these, I think, for ShareScope, and we've mapped out the markets, what we were looking for in an area for the S&P or NASDAQ to hit. We got those. The markets come off the lows. Now we're in a bit of a consolidation phase with strong moves in some markets, and we've got that, you know, digestion of those moves starting to take place. This was written on the 21st and the 22nd of June. So, you know, obviously those AI stocks have started to digest a little bit already. Talking about short-term froth here. So have a read of that. It will, you know, what I will say is if you visit ShareScope and look at the articles as they drop there, you will get them in real time. If you're waiting for Twitter, you will get them in about a week's time. So make the trip to save the ShareScope feed in basically a favorite. That's what I would say. Also, I'm trying to do more of my work from YouTube, obviously. FinTwit's kind of acting a bit strange at the moment. So if you like an article, hit the like button. It helps me with the content as well. I want to mix it up a bit, as I always do. But I do my daily routines. And, you know, the more activity I get on the YouTube, the more I will drop them live, because I do them virtually every day, and I drop them in the chat group some days, and I drop them on the YouTube other days, and in the website other days as well. So hit the like and subscribe, obviously, if you're interested in that, and it will also help me get the content to those who appreciate it. So, that's where we are in the markets in my portfolio. One thing to note is that you don't have to be fully invested to do okay in the markets. It's a state, building on success is what I do. So, I'm up to 53% invested and I'm building on success, and, things are working. It's unrealized gains. I would rather give unrealized gains away than limit potential outliers, because I'm not trading in and out of these positions all the time. I'm trading less than most active investors, in the trend portfolio. I like to add to what's working, and when I sell, I sell up at once usually. Sometimes I will de-risk a few if it's a huge trade or it's in a POS sort of stock, but generally when I'm looking for good growth stocks in the UK markets, my process is to buy right, sit tight until the trend ends, and that will, that volatility. Basically, last week, it was what I call a widespread market, and not much interest in small caps. If some technical levels get traded in, the main markets, risk will naturally flow into the more risky stocks. The more technically bullish the markets are, you'd like to see the 250 sort itself out to let the flow go into the more risky areas of AIM. But there are good trends in AIM. They will all have the volatility. The only day what will ever feel weak, what will ever feel horrible, is when they all come down together. And last week, yeah, a few of my main holdings had corrections, but it was very low volatility because we position size. You should never have a volatility problem, is what I'm trying to get across here. If you position every stock, position size every stock based on its own volatility, you will build a portfolio what hasn't got a volatility problem. You get to choose the volatility as well up front. So I do that with heat limitations and risk per trade, and every stock will have a different area what I position size for in percent. It's not important. I'd like to keep them in the sweet spot of sort of, I'd say around 20% would be fantastic, but realistically a lot of these stocks whip up and down a lot more. They're twice as volatile as main market stocks. So position sizing is key. Lose the percent. If something's down 10%, it doesn't mean it's trading badly. It might be a stock what whips up and down, 60% up, 30% down. So 10% would be extremely low, wouldn't it, for a pullback in a thin small caps growth stock. So yeah, lose the percent way of doing things and start position sizing for what you trade. People tend to teach diversification as an excuse for lowering the volatility, and it doesn't lower the volatility. Trend helps the volatility of a portfolio by not holding anything what's falling. Say you might say over 6 months. You might, as long as it's above where you bought it, they will go into corrections, but the trend should be up. If the fundamental case is good, the trend should be up as well, if you're a fundamental investor. So price, sometimes price is wrong. Well, yeah, sometimes price fundamentals are wrong and price front runs that, So to sort out volatility problems, you want your stocks to be rising over a time frame. You want to position size for the volatility of what your product you're trading. Diversification won't cut it. If you position size through volatility anyway, you will be naturally diversified anyway, but but you will also won't have that tail wagging the dog in your portfolio where large caps are hardly moving and small caps are affecting the P&L because you're just investing an even weighting in every stock. You know, you don't want to be doing that. You want to be investing or backing into an exit area where your case is wrong, and then if the stock moves up and proves you are right, you want to trail that exit area and add more shares as it rises. That's how you will build big winners, keeping the volatility of the losing end in check. You will always have volatility in big winning positions. You know, you can choose that too. It's the best problem to have. But building on success, you know, what I'm trying to get across here is a year ago people were saying you know, if you're uninvested here, you want to be fully invested. And as we see, the market's going up and a lot of stocks are still going down. So that is not, you know, that's not how you solve the problem, is it? You know, being fully invested, you can be fully invested in the lows of the market and then go on to lose an awful lot of money because your stocks, you know, are just not acting. They're not rising when the market is rising, you know. That's the case in a lot of stocks, especially in the lower tiers of the risk fountain in the AIM market and the lower in the 250 at the moment as well. And it will change as the markets get structurally better. That will improve. So that's a lot on sort of risk management there to take in. If you're interested in that kind of stuff, buzz over to my site at Trading Basis and you can fill your boots with it. Let's move into the volume leaders this morning. Let's just see what's up on volume today. I've got 20% in. I'm not going to alter it. I'm just going to buzz through these, see what stocks. You'll notice that all of these stocks are actually rising over, you know, a time period. So this one has risen all the way through the bear market as well. Pretty normal action on that pullback, you will see as well. JDG, I kind of call this a swing stock now, don't I? Because it's an AIM 100, but we had the swings go through the screens. This was the notable one to take if you were interested in that. Let's just buzz through these. AB Foods, not seen it in quite some time, to be fair. You know, this was a great stock coming out of 2011. Just remember what I've just tried to get across there. This stock has missed every bull market since 2015. You know, it missed the post-Brexit bull market, didn't it? It just, you know, it's just continued on its. It missed the post-COVID bull market. It just didn't take part. It's just in a wide, loose, horrible action. Point I'm trying to get across here, and it goes that point, you know, trying to make money on yesterday's favorite stocks, because so many investors are only in the markets until the first bear leg or the first, you know, and they get crushed without any risk management. The message never sinks home because the turnover in this sort of FinTwit space is unbelievably high. These simple lessons go basically, they're just not believed, are they? You know, yesterday's favorite stocks become lead weights. Yeah, really normal action on this, as we've mentioned already. Turning up today, which is good for my portfolio. I do not have a crystal ball. I cannot read the future, but I know that's in the right direction of the trend. AEO, bit of a choppy one. Chariot, Euler. A couple of Eulers today. Oil trying to pop, isn't it? I think it is anyway. Sizzle, obviously a full-on POS stock. There's a tutorial in how I deal with those in the website. because we had it on the swing points, didn't we, a few days ago? In fact, it hit the swing points on this day here and then got back down again, but it went up on volume, and it's a full-on POS. It's deceleration in the turnover by the looks of it, loss making, all that sort of. I haven't traded this one for a long time. It was pumped to high heaven, wasn't it, by those that pumped. So that's what's in the volume leaders today. Not that much. Let's see how the start of the month progresses. Hopefully it progresses nicely. So if anyone's out there who's still here and could share the ShareScope article, that would be fantastic. And hit the like and subscribe if you want to see more content on the YouTube. Cheers all.